Hey everybody, Preston Brent here with our weekly roundup. This is for the trading week ending, March 16th, 2018. What I've got on the screen here is the E-mini S&P 500 futures, and you can see we're down but not out. By that, I mean we're just slightly above the 50 EMA, but a couple of key things happened this week. We finished the week down. The markets tried to get an escape velocity, but just could not, for whatever reason, do it. And I'll put a pattern in here for you in just 1 second, but I'm just kind of widening this out so that you can see. Now, these are the futures, so they trade just about 24 hours a day. If you take a look at this, you'll see pretty clearly that this was the prior pivot high. And none of these days, we tried to get up there. Okay, we tried to get up above there and close up above it, but we really couldn't quite make it. I mean, if you look at the last couple of days, you can see here there was a wick right there, and there was one right there, right? Both of those guys. And we couldn't get up there. In fact, we ended up, this bar right here is a very bearish bar. Okay, it was a bearish engulfing pattern, and then we closed down near the low. We actually made new highs intraday, taking out that prior pivot, but I was telling our members, unless it holds, then that's not a good thing. And it clearly didn't. I mean, we kind of moved up early in the morning, and then boom, it just came right back down again. Now, look at the red line here. This is the 50 EMA. We're seeing that over the past 3 days, Wednesday, Thursday, and Friday, that's holding up. Okay. Today was kind of a no-nonsense day. We traded within the range. This was an inside day from the previous day on Thursday. So basically for the week, we ended up net down across most indexes, but we're sitting here in this steady state pattern. Why? Well, one of the things that I'm looking at is next Wednesday, we got our new Fed chair. I call him Power Ranger Powell. He's stepping up to the podium for the first time on Wednesday, and he's going to talk about the Feds. The markets have already priced in a 25 basis point rate hike. That's a quarter of a point, quarter of a percent. Okay. Now, let me just kind of condense this price pattern here just a little bit. And what you're going to see here is a symmetrical triangle. And it's not going to be done very nicely, right? I mean, I didn't draw it very nice. But that's kind of the pattern. We broke out right there. We're coming right back and we're testing here. We could catch the lower boundary and then move right back up. Now, we broke out early in the week. We couldn't hold it, and we've come back to test this boundary area right here. Okay. Now, the odds when you enter into a symmetrical triangle is you break out in the direction that you approach the triangle from. We approached it coming from that direction right there. So that tells me that the odds favor a break to the upside to take that out. But because we got the FOMC coming up next week, anything could happen. If we fall back in and then give up that upsloping trend line, we can come down and test the 2018 open price at 26.75, 25 very quickly. So the market is kind of in an indecision mode at this point in time, which again is not surprising at all. The big question the markets want to know is not, are they going to hike the rates next Wednesday? The markets have already priced that in. The markets want to know, what's the dot plot coming up for the remainder of 2018? Is there only going to be 2 more rate hikes for the year? Or will there be 3? And will Power Ranger Powell be more hawkish? Or will he continue in the line of Aunt B, aka Janet Yellen, and be dovish? Hard to tell right now, because this will be his first press conference. So the markets are, I think we're going to see trade in a relatively tight range. They're going to try and front run what he's going to say. Right now, the markets are forecasting that he could come in dovish, right? So if he comes in and throws more fuel on the fire that there's going to be not 2 more rate hikes this year, but possibly 3, he's willing to step it up, then I think you're going to see the market sell off a little bit. We'll come down and we'll test the 2700. We'll blow through that, come down and test the 2675 again. Okay. So I'm looking at this. Now, if we look at the SPX, where there is no overnight action, and you don't have those candlesticks, you can see this upsloping trend line that I put on here. And we're sitting right on it. And just like the S&P 500 E-mini futures, you can see we are sitting right on the 50 EMA. Folks, it's not going to take a lot to punch us right over. Now, we did take out a prior pivot high. Okay, I mean, that is a bullish thing. You can see here, we had a high here and a higher high here. We had a low down here, a higher low there. So these, you typically need two higher highs and two higher lows to confirm a trend. Now, that would be 1 and that would be 2 for the highs. This would be 1 for a low, and we'll need one more, which means if I were to extend this over here like this to create a pivot point, this will be our line in the sand right here, this line right here, which is this pivot point. We're going to want to hold this. So if we do pull back, and let's say we catch right in this area here, which is our 27 open on the SPX cash index, and then we move up and then eventually take out this guy right here, this would give us number 2, our next higher low. And then that would give me more confidence that we're going to come out and make new all-time highs in the SPX as well as the futures. So this is what I'm going to be watching for over the coming 10 trading days. Remember, the FOMC is going to be hitting the wires here next Wednesday, 2 o'clock Eastern Standard Time, New York City time. And then we're going to get Power Ranger Powell with his press conference, 2:30 p.m. Eastern Standard Time. So it's going to be a very interesting week next week. Everybody wants to know where he's coming from. If we look at the Dow is not quite as happy as the S&P 500. But again, this is the Dow index, the cash index. I've drawn the lines, and you can see how we're winding up here as well. All right, you can see where we've tested the downsloping line and the upsloping. But notice in the Dow, folks, that we are currently underneath the 50 EMA. Couldn't hold it. We attempted on this bar right here, but we couldn't get above this downsloping line, and then we came back down to the bottom here. So this is providing support down here. This is providing resistance here, and we're just winding up here. Okay, it's a daily chart. So by Wednesday of next week, 3 more bars, bam, we're gone. Bam, we're gone. Now, one way to take a look at this, vol's a little bit higher than normal in the Dow, but you could just come in and pick up a couple of calls and a couple of puts at the money, doing a straddle. At the money straddle, you'll pay a little bit more for it, okay? But it has every potential, depending on what Power Ranger Powell says, of really exploding, because we've had this wind up here, okay? And you can see in the MACD, it's a very similar kind of thing, all right? So I suspect next week we're going to get much of this resolved, and we're going to be able to establish a pattern here in some kind of charting direction. It's been very choppy since we bounced off the lows here back on early February for both the Dow and the S&P. Now the Nasdaq is slightly different, which gives me hope that the markets maybe want to move higher. If we look at the Nasdaq futures, you can see here in the Nasdaq futures, we actually made new highs this week, new all-time highs. We made them on the 13th, 3 days ago, okay, at 72.1450, and then we just pulled back just a little bit. We're well north of the 50 EMA, well north of the opening price for the year, okay? So generally, the other markets, the Dow and the S&P 500 E-mini futures, are underperforming Nasdaq. Now, we've seen some sector rotation from technology into other stocks, into other sectors. But if the Nasdaq gives it up, it's not going to be good news for the other indexes as well. But right now, Nasdaq, I think, is kind of holding everybody up to the upside. And of course, if we look at the Russell is outperforming as well. You can see here's the 50 EMA. The Russell almost made new all-time highs on the 13th as well. Not quite, but very close. So it's performing in a much stronger manner. We've had a low and a higher low and a high and a higher high. One more higher low, and then we've got a definition, a classic definition of a trend moving here, which would be just a resumption of the original trend, the bullish trend that we've been under since 2009. Okay, but we're well north of the 50 EMA, and we're well north of the opening price. So this is all going to come to a head next Wednesday. Okay, I mean, that's kind of where I see it. If we look at volatility, volatility actually came in a little bit today. You can see it bounced up through the week, and in the last couple of days, it pulled back just a little bit, but we're still in the yellow zone. Okay, I said we're probably going to stay in this yellow zone for at least 90 days. We may dip our toe down like we did here, but the odds favor staying in the yellow zone. If Power Ranger Powell comes out and the markets interpret his press conference says 3 more rate hikes or 4 rate hikes for this year is more likely, or more likely than it was going into the meeting, you're going to see volatility come back up. You're going to see the equities pull back just a little bit. Okay. That's kind of what I'm looking at here. If we look at the bond market, the bond was relatively flat today. It's trying to get some elevation here. Now, I have said that if we get up here in the bonds, I'm going to be an active seller. Right down in this area here, we're just going through a bottoming process. We've had a little bit of divergences to the upside, so an upside move did not surprise me. Remember, my forecast for the bond market was done way back over in this area here. I was looking at probably in the beginning of this year, late last year, the bond market coming down to about 140. Maybe just slightly below 141. We came down to 142 in 14 seconds or 14 ticks. And that's kind of where we're sitting right now. I suspect this has not got that much more to go to the upside before more people come in or more money comes in and starts to sell it off. If we look at the 10-year interest rates, that's what we've got to follow very closely. We moved right up. We hit the 2018 high. I had said up above this shaded zone is our resistance area. I had called for around 3%. We had 2.943. I think the markets can still move higher with the rates up at this level up here. But this is going to hold up as well until we get through the FOMC. All the currencies, the bonds, the treasuries, 10-year, 30-year, 5-year, 2-year, the bills, everything is going to be holding up to see, and it's going to drive the yield curve. We're going to see how the Feds play this coming Tuesday, and then with their policy statement on Wednesday. So we got to watch it very, very closely. So this 10-year, as you can see, has pulled back just a little bit, but I think it's going to go a little bit sideways until we get through the FOMC policy statement. You're not going to see too many people committing directionally, either up or down, long or short, until this gets determined. Now, the dollar's an interesting little animal. It's sold off throughout the entire year of 2017. We started 2018, it started to get a little lift, and then it sold off again. And now we're just bouncing around down in the bottom, just like the bond market. All right, we're bouncing around in this area here. I think I'm looking at the dollar to actually fall down to 86, 89 area. But again, this is another one you do not want to be long or short in, or the euro dollar or the dollar euro. You do not want to be playing this right before the FOMC, because this thing could move pretty good if there's a surprise in the market. Right now, the chart seems to indicate the dollar wants to go a little bit lower, and the euro, as you can see here on this chart coming up on this daily chart, the euro is going to find support here and may want to go a little bit higher. But we're going to see. Everything is going to come to fruition here this week, and it'll give us a little bit more of a longer term trend or a direction here. If we look at gold, it's kind of doing what I said it would do, which is come down here to this 1300 area. As you know, I haven't been playing gold this year. And our 2018 high is at 1365.40. I've left these other highs on the chart just so that you can see there's a lot of resistance up here. The past 3 years, we're near the highs of where gold has been, from 2016 high, 2017 high, 2018 high. So there's a lot of resistance up here. I think gold is probably going to push lower, find more support down in this area, down around the 2018 open. You can see this volume over price. So This is where there's kind of established a fair value. This is where most of the buyers and sellers have been kind of holding the price. If this breaks to the downside, folks, it's going to run quick. Again, this is going to move on the FOMC. So I think we're going to hold up here. I'm going to stand aside and see what the FOMC does, and then we can play it from there. Okay, silver, if we look at the silver market, you can see here we're back inside this triangle again. All right. You can see the wind up here. I mean, just a huge wind up, much like the Dow and the E-minis. We're going to wind up here, and it's going to break one way or the other. Now, again, just like those two, doing a straddle in SLV. It could move up very strong, or it could go lower. The charts would seem to indicate it's going to move lower, but it's hard to pick this direction. So that could be a pre-FOMC trade if you wanted to just go long puts and calls right before the trade. Vol is not that accelerated right now in silver, so that could be a really interesting trade. SLV would be the ETF for that one. Energy, oil, we had a really long, strong surge at the end of the day today. The rig count went up, but you can see here with oil, we haven't, even though we had that move today, we haven't really gone anywhere. We're kind of in this tight range here. You can see all this volume over price in this shaded zone. Let me just blow it up just a little bit more so that you guys can see it. You can see all this volume coming in right here. We moved up. Here's a resistance zone sitting right here, right around the 62.32 area. We went up above it. We pulled back. We got the 50 EMA sitting up here. I think it's going to be very difficult for oil to get much north of here, depending on what we get out of the oil inventory reports. And then, of course, if I draw this out, it seems like oil as well could be coming to a head. I mean, if I draw this trend line, you can see here, I didn't draw it very straight, but you guys get the idea. We entered it from down below, symmetrical triangle. As we wind up, there's the pitch, boom, away we go, away we go. The odds seem to favor, we entered the pattern from down below, so it favors a continuation of this pattern, but I can't tell you how many times I've seen these symmetrical triangles fail, and then it rolls back over. Okay, so I think some of it's going to depend on the global, on the FOMC and whether, because there's a lot of money in the equity markets now that seem to be tied in with oil. When the equities sell off, so does oil. When the equities move strong up, oil tends to follow. So we're going to hold on. We've got an oil trade on right now in our secret trader group. And let's kind of see where this thing plays itself out here. Okay. And then, of course, if we look at gasoline, inventory build was coming, but you can see gasoline is actually, I believe, let me just see if we got this right here. I believe we did, 1942. Yeah, we made new all-time highs in gasoline. We're hitting my resistance point. There's the new all-time high. But there's the resistance point, and we're butting right up against it. I think gas can go a little bit higher. Okay. You can see the open, the low, and the high for the year for gasoline. I had said gas is probably going to run up into this area, and that's exactly what we've done. So let's kind of see how this thing plays itself out. Gasoline sometimes runs in front of oil. We've had some mixed inventory reports where oil has been going down and gasoline supplies, oil inventories have been rising. And gasoline inventories have been going down. So we're in the middle of the season. We're at the beginning of the seasonal period for oil to seasonally move up. Refineries are changing over to a summer blend. So we should expect to see gas move a little bit higher and oil move a little bit higher. So let's see how this thing plays itself out here. And then, of course, we've got a number of things that we haven't done yet in the ag market or the meats or the softs. And there are some equities that we're playing. We got some volatility trades that we're looking at. We're also into our videos and our sessions on our option master. So if you're not playing with us, you should come on, jump in the playpen. We got plenty of room. It's a lot of fun. We got a global audience, and I suspect you will get something out of it. If you're a commodity trader, then you'll certainly get a lot out. If you're a futures trader, I think you'll get a lot out. And then if you like volatility trades or options trades, then I think you're going to learn a lot there too, whether you're a member or in our option masters. I'd recommend both, but I'd like to see you guys come on in and join us. We've got a pretty good group. It's growing all the time. And I want to wish everybody a happy St. Patty's Day for the weekend. Stay out of trouble, and stay safe, and don't drink and drive. All right, everybody, have a great weekend. And members, I will see you this Sunday night for our weekly market watch for the upcoming wild week that we're going to have. Take care, folks. Ciao.